Hello friends, good evening. This is Ruchira Vaidya and you are watching my CA Final Audit channel, that is for CA Final Audit students. I hope you all are doing well. Now friends, in this session we will be learning SA 299, that is Joint Auditors Responsibility, means responsibility of the joint auditors. Now let's begin friends. The first part is introduction part. Now who are the joint auditors? Joint auditor are the person who conduct the audit of the financial statements of the entity together and jointly in coordination with each other. Joint auditors report on the financial statements of the entity in coordination with each other. This standard deals with the professional responsibilities which the auditors should undertake in accepting each appointment as joint auditors. Friends, also note one thing, this statement does not deal with the branch auditor appointed under section 143 subsection 8 of the Companies Act 2013. Now friends, let's begin to the second point, that is objective. What is the objective of this standard? Division of work. Now the joint auditors should by the mutual discussion divide the work of audit among themselves. Division of work may be based on the following factors such as branches, regional office, plant wise, asset or liability wise, income or expenditure wise. Also, certain area of work which is important in nature may not be divided and carried on by all the joint auditors. Now the next point is documentation of division of work. Division of work among the joint auditors should be documented. Even if you are performing the audit as a joint auditors, the division of work among the joint auditors should be documented, and also this should be communicated to the client. This is the very important thing in this standard. Documentation of division of work among the auditors should be in writing and agreed by all the auditors, and this division work may also be communicated to the client. Documentation of division of work will also facilitate coordination of work among the auditors. Okay friends, now next point is sharing of responsibility of joint auditors. Now the work which is divided. Each joint auditor is responsible for the work allocated to him. The second part is the work which is not divided and jointly carried on by all the joint auditors. Now friends, for this purpose, all the joint auditors are jointly and severally responsible in respect of the audit work which is not divided among the joint auditors and is carried out by all of them. It may, however, be clarified that the joint auditors are responsible in respect of the appropriateness of the decisions concerning the nature, timing or extent of the audit procedures agreed upon them. Proper execution of these audit procedures is the separate and specific responsibility of the joint auditor concerned. The joint auditors are jointly and severally responsible in respect of the matters which are brought to the notice of the joint auditors by any one of them and on which there is agreement among the joint auditors. The joint auditors should examine that the financial statements of the entity comply with the disclosure requirements of the relevant statute. They are also responsible for ensuring that the audit report complies with the requirement of the relevant statute. They are also responsible for obtaining and evaluating information and explanation from the management, and it is a joint responsibility of all the auditors. Now friends, the one point in this sharing of responsibility of joint auditors is that the matter brought by one joint auditor to the attention of the another, which is related to the work of the another auditor. Now friends, it may happen that one joint auditor is coming across the matters which are not being dealt with by him but are carried on by his another joint auditor. Now in this case, the joint auditor when he comes across the matter which is relevant to the areas of responsibility of other joint auditor and which deserves the attention of the other auditor, then he should bring this matter to the notice of the another joint auditor. But friends, if the joint auditor has brought this to the notice of the another joint auditor, after the audit report has been submitted, the other joint auditors will not be responsible for that matter. This means, friends, before submitting the audit report, the one of the joint auditor should bring the matter to the notice of the another joint auditor, which deserves attention of the another joint auditor. Now friends, we come to the next point, that is it necessary to review the work of another joint auditor? The answer is no. It is not necessary for the joint auditor to review the work performed by the another joint auditor. Each auditor can assume that the other joint auditor has carried his work as per the accepted audit procedures. Now friends, what if there is difference of opinion among joint auditors? The audit report is jointly submitted and signed by all the joint auditors, and all the joint auditors generally agree on the report to be submitted by them. However, in case of difference of opinion among the joint auditors having different view may report separately, and in any case they are not bound by the views of majority of the joint auditors. Friends, it may happen that joint auditors may have separate views. In this case, the joint auditors who are having different views, they should report separately stating their own views. And in any case, they are not restricted or not bound to be in agreement with the views of the majority of the auditors. Now what question I have taken here, friends, just for your understanding. Let's begin with the question. I will discuss the answer as well. ABC and Company and DEF and Company were appointed as joint auditors of Good Healthcare Limited for 2009 to 10. A special audit was conducted during March 2011 and it was observed that there was gross understatement of revenue. The revenue aspects were looked after by the DEF and Company, but there was no documentation for division of work among the joint auditors. Comment on the above. Now friends, in this case, there was no documentation for the division of work and the responsibility for the revenue aspect was delegated to DEF and Company, in which there was gross understatement of revenue. Now ABC and Company has not reviewed the work as they have put their reliance on the work performed by the DEF and Company. Hence here there is a violation of SA 299 as the division of work was there but the division of work has not been documented. In the normal course, DEF and Company was looking after the revenue aspects and there was gross understatement in the revenue aspects, so DEF and Company will be held liable for negligence. But on the other scenario, if would be taken into consideration, if DEF and Company refuses to accept sole responsibility of the fault, ABC and Company have to prove by other ways and means of evidences that the particular area of audit was exclusively done by DEF and Company only. Now friends, it means we can understand that the importance is the documentation of division of work. Even if you are conducting the joint audit, there should be documentation for division of work, that a particular plant or particular branch, regional office or asset liability wise, income expenditure wise, the audit will be conducted, and it is the documentation of division of work should be also communicated to the client to be on safe hands. Now this was the answer for this question. I hope friends you like this video, and if you like this video please give a thumbs up and also don't forget to subscribe my channel. I hope you all have a good day ahead. Thanks.